What's going on, traders? Welcome to the Weekly Watchlist, where I do a technical analysis and give you some of my thoughts on the tickers up here on the left. So as always, we will do a technical analysis on the broad market, and then we'll jump into our companies. You can see there are quite a few earnings coming up, so that's something to talk about. And lastly, the Discord members did vote on a new set of quickfire round tickers. Here, you'll notice the last one on the list is actually Bitcoin, which we've only talked about once before on the channel, so stay tuned for that. And one last thing before we get into the analysis is that I would encourage you to watch the midweek market update to really understand the concept of liquidation break, because it's going to be talked about quite often in today's video. I'll link that up above in the cards. Jumping into our SPY weekly chart, talking about candle structure and location as always. For structure, we've got quite an impressive hammer candle here with an especially large lower wick. Now, what that's telling us and indicating to us is that the buyers really stepped up off of these lows. They were not only able to retrace 100% of the down move, but more than that, and most importantly, close the week at all-time highs here. So really bullish action in terms of the candle structure. If we look at what's happening with location, right? We do something like that to check out our 4-week balance we were stuck in. We're really just seeing the first leg up and out of that balance. And if we check in on volume, right? Really impressive breakout volume as well. Now, some of that is attributed to the down move we saw on Monday, but again, as we talked about in the midweek market update, more of the strength and volume essentially happened on the move higher, off of those lows in there. So everything really is pointing to higher here on the weekly time frame. But before you just go ahead and become a blind buyer on Monday, I really want you to think about this. It's not the best area to initiate any new long positions. And the reason being is that there's no previous market structure to, give us any inclination of a breakout, right? It would be completely different if SPY did something like this and then we see a break of that level. Absolutely, you take that breakout buy every single time. But because that's not the case, because we're moving into the all-time high like this, you probably don't want to initiate a new long up here because the pullback risk is a little bit too high. Let's check out the daily for some levels. So on the daily time frame, what would be ideal here is to open on Sunday night and into Monday cash open, something like this, consolidating sideways just below the all-time high. When that breaks, sure, take it long for blue sky levels, whole and half dollars, any intraday levels that do form, right? That's your bullish trade setup. To the downside, though, again, the pullback risk here is pretty large, right? We have a really impressive move here off of the lows. It's over, it's about 15 points, a little bit more than 15 points there. So just impressive move in the SPY. Again, the pullback risk is a little too high to just be a blind buyer at these levels, at least for a swing trade. To the downside, your support is going to be here. This is the key level because not only was it another liquidation break on Friday, we'll talk about that in just a moment on the 30-minute time frame, but it was also the high of Wednesday. So key support there at 377 the whole dollar. Anything underneath that would be, not really ideal for trend continuation. Can we day trade it? Absolutely. But for swing trading, you don't want to see that because essentially what we've been doing is breaking out of the balance. And if we move back down into it, again, your chances for a look below or look above and fail increase, in which case your target will be down here at 364.22. We've talked about this level for so long. Again, that would be the worst case scenario for, SPY right now and trend continuation higher. Again, can you day trade it? Sure. There's definitely going to be a key support zone in here. You can see it's been quite choppy every single time we've come into it. Of course, we did ignore it there on Monday's sell-off, but I would imagine that if we do come back down into it, it will act as support in a more controlled manner, right? If the sell-off, I'm not saying there will be one. We've already talked about the fact that things are quite bullish right now. But again, if the sell-off is controlled and the pullback is controlled a little bit lower, sure, it should act as support in there. Now let's go to the 30-minute time frame. So again, I can illustrate to you liquidation break and why it's actually a good thing for the market. If we think about what was happening here on Friday afternoon, people are shorting, especially the people down here. As we retrace 100% of that move back higher, those people should either be stopping out of their trade, or if we open up somewhere up here on Monday, they're going to be feeling a lot of pain, right? So they have to then liquidate their positions, if they can't take that pain anymore, which would make room right? For buyers to move prices higher. All the short-term sellers should be out of the market at that point. And, based on the fact that we're breaking out of a 4-week balance, there really are no longer-term sellers here as well. So all things considered, again, I do think we go higher here into the earlier parts of the week, or, into this week in general. You have the levels mapped out for you. Again, be careful about new longs right off the bat, but if we develop new market structure, sure, it looks good. In terms of the Qs, I would say almost the exact same thing, right? We have a new all-time high, which we pretty much closed at on Friday afternoon. I think the post-market even continued a little bit higher. So look out for, blue sky levels above that, $1.50 intraday levels that do form. The same exact thing holds true for Friday's afternoon low. It's coinciding with Thursday's high as well as Monday's high. So key support at 315.16. Anything underneath that, check out the touches we have in here. That's going to be at 312 the whole dollar. Especially check that one out. That one was nice as well. And then lastly, if we go lower, you probably just want to look out for Monday's low, right? I would say that 308.30 may kind of act as support, but really what's fresh in the memory of the market is Monday's low. And I would imagine that if we continue lower, again, I think everything still points to higher here, especially in the Qs. Monday's low would be the thing that the market remembers and kind of goes to here around 305.15, 305 the whole dollar. But once again, as we've talked about, everything is still poised in quite a bullish fashion. Everything here is quite clearly in an uptrend. So if, I think a more likely scenario is potentially chop in this section of the chart and then a breakout higher into all-time highs after that. And then last but not least, we have IWM, Russell 2000, and our small caps. And there's a key difference here. And, hopefully you can see it. We've got yellow lines indicating that we do have a gap remaining unfilled below us. In the SPY and the Qs, all of those gaps have been repaired. The structure is a little bit better. But in the IWM and the small caps here, boom, straight up, didn't even come back and bother to repair the gap below us, and now we're forming almost like a daily bull flag, right? Something that kind of looks like this. If we consolidate sideways up here for a little bit longer, sure, take the breakout for a move higher. But again, do you want to be a blind buyer of the all-time high up here? Probably not. In terms of levels, this one's no longer really in play. I would say that we have a break of the all-time high at 210 just about, round that up. And then we have support here from Friday's low, once again, the 204.65 area. And then it would probably be, in my estimation, again, market memory says that we probably ignore this and move all the way to the top of the gap here at 199.25, and then potentially fill the gap down to 197.75. But once again, is anything about this chart necessarily bearish? Probably not. We're moving, we had a controlled pullback, right? It was a little more aggressive than the grind higher, but it was a controlled pullback. We didn't violate any of this area of support in here, and now we're making a new leg up. So again, is there anything bearish about this chart? No, but I do want you to have the levels lower. Again, probably want to play here a daily bull flag breakout, something that looks like this for a move higher in IWM. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. Jumping into Apple, you can see that we're sort of violating that support trend line there, but we're back above it now, so I want to leave it on for a day or two to see if it resolves up or down. If we go sideways through it, I'll just take it off the chart, but for now, hammer candle on Friday happening at key support was prior resistance, leads me to believe Apple could go higher. If we clear this area, 133.50, then we're looking at a move back into the all-time highs, closer to that 138 whole dollar. Again, with the catalyst of the self-driving car news and all that good stuff, you guys know I'm not a very news-driven trader, but it could act once again as a catalyst to move prices, higher. Again, technical break has to come first, but the move could happen quicker than you think based on that, catalyst, as we've said. To the downside, if the hammer fails to bounce us here, then we're looking at a move back into the double bottom from Monday and Wednesday at 126.65. Anything underneath is a retest of the prior breakout zone at 124.50, and then the 50 SMA, depending on time of week, it may be at that level, but if not, it will be the next piece of support in between this range here. So Netflix is probably the most bearish in my estimation of the charts that we'll cover. And the reason being is that on Monday we had some relative strength, right? We moved down, but we didn't really close below the breakout level here at the 518.75 mark. Tuesday we held it as well. I thought, great, it's showing some relative strength, compared to the selling off of the market, maybe we'll get a bounce here and we will continue this uptrend. But again, on the last 3 trading days of the week, we just got proven wrong. So now we have sideways action beneath our support trend line. The only sort of saving grace here is the fact that we're trading above the 50 SMA still. I don't want to ignore the fact that there's a hammer candle there on Friday, but if you look at what happened just before it, it's a inverted hammer. So which one do you pay attention to? I would probably just group them as one and call it an indecision candle. So any direction could sort of happen here. I want to point your attention to that earnings on this one are mid-month as opposed to later on in the month. So anything I say here, again, take it with a grain of salt. Just trade the levels and not necessarily directionally based on earnings. So if we go down, again, which I do think may be in store based on the fact that we have value established lower, 50 SMA breaks, puts us back down into this area of the chart, the 493.85 key flush point as noted by that. If that breaks, which again, it's probably likely given all the touches that are there, we move back down into the 477.62 where the 200 SMA will be at some point. So probably a first touch bounce there. It was a strong support in the past, but when it breaks, again, I think that's when Netflix gets the most ugly to the downside. If this resolves to the upside, I'm just going to map them out quickly. We have the breakout area at 518.75, which will be, again, a back test of the support trend line. So kind of a super resistance there to the upside. Anything after that, look for the 537 area, and above that at the 550 mark. One thing I want to make your attention to is if we do go higher here, keep in mind that anything like this sets a lower high in here, sets up the potential for a head and shoulders in Netflix. Not a whole lot to say about Tesla. It's gone parabolic, and when you can see that something's gone parabolic, it's probably too late to be getting involved. I mean, could this thing go to 1,000? Is that where people want to take it? Maybe, but do I want to risk the pullback of potentially something like this, getting long up here? Again, it's the same theory as what we talked about in the broad market, just not the best time to be, swing trading up here at all-time highs. Can you day trade it? Yes, absolutely. Take any day trade setups you see that form as we head into blue sky territories. To the downside, though, keep in mind poor structure, right? We have gap 1, gap 2, and pretty much, very emotional buying on the way up. So again, I'm staying away in terms of calling levels up and down here on Tesla. I would just stay away from swing trading it, take intraday setups kind of only. Alibaba is going to be another one that's sort of difficult to swing trade just because of the way the news flow is impacting it. With the whole delisting and then relisting of Chinese stocks, again, probably something that's a little difficult to swing trade. But in terms of day trading, if we get a break of this double top here at the 238 mark, then I think we probably have a good chance of moving into this gap here. So anything over the 243.50 mark fills to 252.78. 200 SMA could be a bump in the road as that happens, but based on the fact that we have hammer candle followed with green continuation, it looks like more upside could be in store. Again, remember the news cycle could destroy sort of anything I say about that, but for now, that's the upside target. If we fail here at the 225 mark, then look for a retest of our 212 to the downside. So Facebook is another one of the bearish stocks in my estimation because we have a clean back test of the support trend line, right? Inverted hammer printed there, and now we have a new downtrend that's formed. But, of course, I can't ignore the fact that Friday we did put in a hammer candle. Again, earnings coming up later on in the month on this one, something to keep in mind. But for now, sort of breaking down out of the larger symmetrical triangle. We've talked about this, right? So if we fail this 265 mark, I think the next target's clearly here around 259. Anything underneath, we have this set of lows in here at 255, which is a nice round number. Again, as earnings come up, could anything happen with it? Yes, absolutely. So upside targets as well are going to be here at the 273.12. Pretty congested area, actually. I'm actually going to take that one back. I'm going to say not that area. We'll get rid of that. I would say you probably want to look out for this one. That area there at 271.92 as opposed to slightly higher where we had it. Anything above that, 50 SMA, and then area here at 278.82. Look at all the touches. I mean, that is a significant resistance there. With earnings, we'll go one more higher, so 287.89 after that. But based on the fact that our highs are getting lower, and our lows are getting lower as well, we are in a downtrend here, and there's no reason to believe, again, unless earnings throws a wrench in it, that we will just reverse out of nowhere. So NVIDIA has had to have had the craziest week I've ever seen in terms of ups and downs. I mean, this, Monday's action, huge run, right? All the way to the top of our resistance zone up here, and then we take it back in the same day. Next day, we followed up with some green. And then the next day we take it, back and more with a huge nasty red bar. Next day all the way back up. So I mean, it's all over the place at this point in time. I can't ignore the news catalyst. It's partnering, I think, with NIO, the electric vehicle manufacturer. So I'm not sure what that will do to price as we, open up the cash open on Monday. So I'm just going to map out some levels. If we can clear the 544.50 mark, then I think it looks great for a move higher, right? Very, very little resistance in this area of the chart, as noted by that emotional selling. So next target above 573.52, all-time high after that at 589.07. If for some reason the catalyst causes it to flop, which, I mean, this is the beauty about technical charts. You either take the break or you don't take it because you didn't get a break. It's not like you just jump in based on some news. So if we flop based on the catalyst there, then I would say key support is probably here, right? 515.53 or 43. Anything underneath is going to be this area here at 504. And, depending on how aggressive the selling is, if it's selling in the first place, we could go to the 492, right? If it's aggressive selling, they're probably not going to care much about the 500 psychological mark, and they'll just put it right back down to a known area of support. So again, kind of all over the place this week. I'm not really looking to take any longer term action until we clear this area up here or break down below this one here with some strength. Microsoft is kind of in another situation where you need to wait and see. Our candle here on Friday is a question mark indecision candle. And basically what it's telling us is either wait for the break of the 220.85 mark to retest the resistance trend line, or wait for the break of this area, sort of the lows in there at 216.39, prior breakout level in here, to maybe come down and revisit the low from Wednesday. That low is going to be here around the 211.88, call it 211.85. It's a nice round number there. Anything underneath, key support as noted by 1, 2, 3, almost a triple bottom there at 210. Anything underneath that is going to be here 206.79. But again, in terms of the trend and what's happening here, it was a back off of the resistance trend line, but now it looks like we could potentially come back into it one more time and once again put some more pressure on that level. The more pressure that develops underneath it, probably the more likely it is that, if we do something like this, then like this, it breaks and we do go higher after that. And lastly, leaving Amazon zoomed out because I just want to show you how lackluster this break of the symmetrical triangle was. I mean, people probably thought it was going to go here, right? It looked like it could have. It looked like it could have, continued higher, but we've retraced 100%, and now we're stuck back in this range, which has been, pretty brutal on Amazon over the last, 2 months or so. So all things considered, again, stacking up of candles with conflicting wicks, right? We have inverted hammers and then a hammer. So I'm going to pair them all together and just say that this is basically an indecision candle telling us it's not sure what direction it wants to go. If we get the break below the 31.31, sure, target this area in here at 30.78. Anything underneath is going to be around 3,000 psychological. If we can take out these highs, right, the 3-day highs, I'd call them close to, let's just round that to 3,200, right, because our wick here is a little higher. So a break of 3,200, then the next target above would be in here at the 32.50. Anything above would be our highs in here, which are slightly below that 33.61, probably closer to the 33.42. Kicking off the quickfire round with Roku, I would say the same exact thing here as what I said on Tesla. You probably don't want to be a swing trader, a blind buyer up here at all-time highs. If you're day trading it and you see a setup that potentially makes it want to break that all-time high, great. Take that trade and look for blue sky levels, whole and half dollars, intraday levels that do form. But again, do you want to get involved on something that's starting to get parabolic for a swing trade? I would say probably not, at least for my risk tolerances. To the downside, and again, maybe it's just punctuated by this, we have poor structure that seems a little bit more relevant than what we had in Tesla. Maybe it's because our ranges are a little bit smaller. But again, I think I should have said this with Tesla as well. You also don't want to try to time a top up here. So I know it kind of sucks to just sit here and say there's nothing to do on the chart yet for swing traders, but there really isn't. The risk of pullback is too high, and you also don't want to try to time a top with this momentum. So it goes both ways. But if the gap does start to fill, if we start to see a pullback and intraday we start to break down this 387.19 level, look for the gap to fill at a 379.50. Anything underneath, you can see this prior area of resistance should act as support. Now, what does that set up? Well, I would argue if we do something like this, that sets up the potential for a higher low to be formed in here. Then we need a higher high to continue this uptrend. It would also be a nice almost 50% retracement of this move up, repairing some of the structure on the way. So that's what I'd be looking out for on the bull case for the swings. Anything underneath that level, we have one more gap to fill from 351.75 down to 347.19. So fuel cell does look pretty good. The fact that it filled the gap on Friday and repaired that structure is a good thing. I would just say sometimes, guys, it's as simple as recognizing something like that, right? I don't typically trade these types of stocks because, sometimes this doesn't work, but, key support is quite clearly at 1362. If it holds, it just sets up the case for another, leg up here in fuel cell. To the downside, if it fails, though, I think a more aggressive pullback and more appropriate, in my opinion, pullback would be to the support trend line and to horizontal level here at 1075, in which case, that's probably a pretty safe pullback to buy because you just put your stop loss right underneath there. And if it bounces, great. If you get taken out, it was a smaller loss than your winner would have been. To the downside underneath, if it fails, though, we have 917 and then 734 after that. LI is another electric vehicle maker, and it actually looks pretty good in my estimation. We have this area of consolidation, but the most important part is we had a look below and fail, meaning that anyone who has tried to short in here is now underwater, should be out of the market, and we're moving higher outside of the balance to the upside. What I like about Friday's action is the lower wick confirms this as kind of support. You want to see maybe a few more days confirm that level at 33.15, but if it does, probably retarget the high of Friday and then the 39.11, 41.72, and then all-time high after that. To the downside, you have this level here at 26.68 if we chop around in here and break down. LAZR is pretty interesting because we have 3 days of consecutive inverted hammers, but they're all building value higher, which is, again, pretty interesting that it's relying on a gap up to make that happen. We had a pretty lackluster break of the resistance trendline, and the inverted hammer there, leads me to believe that sellers are selling this thing essentially. So if we go lower, the line in the sand is the double bottom here, closer to that 28.35. Anything underneath, probably down to 22.50. To the upside, if this is a true break and, people buy this on Monday and early on in the week, then you need to clear this area here at 36.03 to come into 39.66 and potentially the all-time high after that. So PLTR is a great example of what could happen on LAZR, right? We have a symmetrical triangle that really didn't amount in a impressive break in either direction, really. So here, what's kind of concerning is the inverted hammer / indecision candle that's formed at the back test of the prior flush point. So to me, that's not what you want to see, right? So if this fails here and we go lower, then that's definitely a lower high than what we had in here. I would say we're probably in a downtrend at that point, and we would look for the 22.99, 23 call it, to break, moving us down to 21.16. I wouldn't put too much weight into that 50 SMA. It's pretty immature. It's never been tested. So again, not a lot of strength there. Anything underneath, maybe call this an area of support at, call it 18, and then 14.47. Am I saying it's going to go down there? Absolutely not. But in the downtrend aspect of things, lower highs are continuing to form if we cannot see a move up in PLTR. Checking in on Adobe, finally, something that's kind of my style. I appreciate you guys for picking this one. To the downside, we have, we're bouncing off of this area here at 469.27, which was prior resistance, turned into support. So I like the fact that it is bouncing, but we have to determine if this is just a dead cat bounce, meaning we'll reverse here at the trend line and continue lower. One key thing is that we are trading back above the 50 SMA, and the 50 SMA is sideways, essentially telling us that the medium-term trend is exactly that, sideways. So there's no real reason to believe it will rocket ship up or, fall all the way down to the ground. Either way you want to look at it. If we throw the Fibonacci's on here, and you can do this sometimes, and we look at the move down, right? If we're going to classify this as a liquidation break, we need to retrace it 100%. And to do so, your odds of retracing 100% are greatly increased, like astronomically increased, if you can recapture the 61.8 fib retracement. So if we can clear back above 487.50, I think it looks good for higher to potentially come back into this area of chop on the chart up here. So Costco, I'm leaving it a little zoomed out so you can see the context of this bull channel that we're in. But what's kind of concerning here is that we're coming back into the support trend line after forming a lower high, right? So here's our higher high, here's the lower high, and now we have, a hammer. Yes, it is a hammer at the support trend line, but it's after a lower high, which again, it gives me a little less confidence in the bounce. So if we bounce here, Great. We need to clear up through this 371.14 to retest this pressure cooker top here at 380. If that breaks, sure, target the all-time high up around 386.88 if I could grab the right tool and just pop that level in there real quick. Anything underneath us, though, if this hammer does not result in a bounce, we have the 360 whole dollar just below as support. Anything underneath that, I would argue that this one is probably the most important here, around 350. Pinterest, kind of just digesting this earnings move up from, past, right, all the way back there. It's really gone sideways and has been stuck in a range for some time. We're testing the top end of it now, but you can see the last time we tried to break out, it didn't really amount to much. So if it does this time, you want to see a clearing of the 75.50 mark. Anything above that is blue sky territories, whole and half dollars intraday levels that form. To the downside, look at the bottom end of our support sort of consolidation channel at 67.50 as support. Anything underneath is here at 65 the whole dollar. 50 SMA will provide super support here depending on time of week and if the move is even down. SQ actually looks pretty good for what I would consider a cup and handle to form, right? We have something like this. A handle forms. Basically what we're looking for is a little bit of bull flag consolidation up here before just continuing up into blue sky territories. Reason being is, again, because of everything we've talked about in terms of trade location and context of the move in terms of, what was happening on Roku and Tesla. You want to see it cool off a little bit and then boom, you get the break higher. That is ideal. So anything above blue sky levels, we talked about that. To the downside, not much support in here at all, right? It was a very mechanical and controlled pullback into this prior breakout area at 214, call it 215. I would say if you had to pull something out, it would be that level there at 231.28, just because we have prior support turned into resistance, then back into support here. So if we do pull back, watch it hold that level, if anything. And then lastly, we have Bitcoin, right? So again, this is the futures on Bitcoin. I'm not sure if it's reflecting the exact value of your Coinbase values or whatever broker you're using to trade it, but the principle will remain the same. Again, once something has gone parabolic, it's probably too late to start getting involved, at least from a risk-friendly standpoint. If you want to get involved with like throwaway money or like what I would consider 100% risk money, meaning you don't care if you lose the full value, and am I saying Bitcoin's going to go to zero? No, absolutely not. But you should probably be comfortable with at least accepting the fact that you could take a significant loss being a buyer at these levels. Go ahead, get involved if you're comfortable with that amount of risk. But, again, where is your support and where is your resistance? It's so hard to say when things have gone parabolic. It's more about the day trading aspect. I would say here is a key level at 36,996. Anything underneath, I would say this is kind of your next key level around 34,275. Anything after that is probably back down here to this initial breakout where we got really, its price really got going above that 30,000 mark. So keep that in mind as well. I'm going to go ahead and just cycle through really quick some stocks here that we can look at for Bitcoin as well. First one's going to be GBTC Grayscale. Bitcoin, again, once something's gone parabolic, probably too late to get involved. You can see we have 2 red days, which is actually a good thing, seeing that sideways consolidation up here. If we can hold on to some of these lows around 44 and just go sideways, that would bode the best for great GBTC here. And then you take the high break there at 48.65. To the downside, if it pulls back further, though, again, just on this example, I would say probably here at 33.25. There's another one, MARA, which is a popular one. And again, the same exact thing. It's probably too late to get involved in a swing trade to the upside, just based on the fact that once something has gone parabolic, it's just, it's too late. And you just got to accept that and move on. There will always be opportunity in the market. If it pulls back, I would want to see it hold on to this area here, 14.13. Now, some people are probably like, dude, you're crazy if you think it's going all the way back there. It's just going to do this and go much higher. I don't know. Maybe it does. Maybe it doesn't. I'm just saying from a risk-friendly perspective, that's where I would want to see it at least hold if it were to pull back in an aggressive fashion. And then one more, we have Riot Blockchain, which is probably the oldest one, or at least the most established one in my estimation. And again, parabolic here. I don't want to just beat a dead horse. You probably want to wait for a pullback to here, 1866. Anything underneath that would be here at 1585, I would call it. And, we'll go one more lower here at 1138. So yeah, that's my take on Bitcoin. Do I have some in a longer term account? Yeah, but is it a lot of money? Absolutely not. It's all risk capital. I don't really mind if it goes to, 0 or if it gets cut in half, whatever. It's just kind of one of those fun speculation plays. And I think that's exactly how you should treat it as well, at least when you're buying up here at these levels. If it pulls back and you get a more risk-friendly entry, then sure, treat it as a more serious investment and manage it that way. But again, if you're buying at these levels, then it doesn't strike me as the case that you're buying as a risk-friendly, serious investor. So there's Bitcoin. So that's going to wrap up this week's episode of the Weekly Watch List. If you enjoyed the video or learned anything new, feel free to let me know down below in the comments section or by simply leaving the video a thumbs up. With that, I wish you a green trading week.